A very good morning. Today is Thursday, the 8th of April. Wishing you a good day ahead. Welcome to today's episode of Morning Well. We're talking about three things. Just how hot is the stock market, RBI policy action, and minimum global tax. So just how hot is the stock market? One indicator suggests the market could be overheating. Recent data from Wall Street self-regulatory arm, the Financial Industry Regulatory Authority, showed that investors borrowed record sums of money to buy stocks. Run-ups in margin debt can contribute to bubbles, and subsequent declines could amplify losses, as the Archegos saga demonstrated. Just a reiteration that there is froth in the market, but I think if you stick with quality, you're okay. Looking ahead though, JP Morgan's chief executive Jamie Dimon thinks the temperature is just right. In an annual letter to shareholders, he said strong consumer savings, vaccine distribution, and the proposed infrastructure plan could lead to so-called Goldilocks moment, one with sustained growth alongside slow inflation and gradual interest rate increases. As for the stock markets yesterday, all eyes were on the minutes of the March's Federal Reserve meeting, where officials reiterated plans to continue to support the economy through low interest rates and large bond purchases. Investors seem to like that message. S&P 500 gained 0.2%, while the Dow Jones edged up 16 points, which is less than 0.1%. And after 2 days of gains, the Nasdaq ended lower by 0.1%. The record high for the S&P 500 came after an otherwise anticlimactic day for the US stock market actually, as major indexes tethered between small gains and losses throughout most of the session with no clear catalyst to drive markets higher. Coupled with below average trading volumes, stocks largely struggle to find direction. The yield on the 10-year treasury was also flat at 1.65. In general, the stock market has kicked off the second quarter on a high note, as the rally has widened. About 94% of companies in the S&P 500 are now trading above their 200-day moving average. This is according to Dow Jones market data. Signs of that market breadth were evident yesterday, with stocks ranging from Amazon to Carnival to Hess all gaining more than 1.4%. Other winners for the day included L Brands, which jumped about 3.6% after UBS upgraded the stock from neutral to buy. Twitter also jumped about 3%. Some central bank action. The Reserve Bank of India reinforced its policy support to secure a recovery in the economy. The measures are powerful. A QE program worth initial 1 trillion rupees to tamp down buoyant yields, and a commitment to keep an accommodation policy stance as long as necessary. It kept its policy repo rate unchanged as expected. The extra support is aimed at countering risks to growth from multiple fronts: an exponential rise in the coronavirus cases, fresh containment measures in several states, and increasing borrowing costs resulting from rising yields. The explicit QE commitment means a record liquidity surplus into the banking system will last into fiscal 2022. They should keep bank deposits and lending rates pinned at their lowest levels in a decade. Bloomberg believes that these measures will help secure a strong growth recovery plan in the second half of the fiscal 2022, subject to containment of the second virus wave. The Monetary Policy Committee voted unanimously in favor of holding the repo rate at 4%, which is in line with the consensus as well. Under the QE program, the Government Securities Acquisition Program as it is called, the RBI will buy sovereign bonds in the secondary market. It's not a one-off move, but a measure to provide additional liquidity support, which will run alongside its existing liquidity injection tools. The RBI said it will keep an accommodative policy stance until prospects of a sustained recovery are well secured, a shift from a time-bound guidance to stay accommodative until early fiscal 2022. So pretty comprehensive policy action yesterday from the RBI. From monetary, moving on to some fiscal action, the drive to overall global taxes for companies gathered more steam after G20 finance chiefs, encouraged by new US proposals, pledged to reach a consensus on new rules by mid-year. The finance ministers and central bank governors said their commitment to reaching a global consensus-based solution on minimal global corporate taxes and how to levy the profits of multinational technology giants. An agreement could have significant ramifications for the world, boosting incomes for many governments as they try to rebuild their economies after their pandemic. Some countries may be a bit more skeptical, as Ireland signaled. Treasury Secretary Janet Yellen unveiled a detailed sales pitch for the Biden administration's proposed new corporate tax code, expanding on the tax proposals released last week in President Joe Biden's $2.25 trillion economic package. The Treasury Secretary said the changes over a decade could bring back about $2 trillion in corporate profits into the US tax net, with about $700 billion in federal revenue streaming in from ending incentives to shift profit overseas. All told, the extra tax hike of about $2.5 trillion over 15 years could pay for Biden's 8-year spending initiative. This is according to the Treasury. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.